to cloud. Well, welcome everyone to the super easy Forex trade room tonight. I want to kind of go over our spreadsheet like I had mentioned. Let's see, I'm going to pull it up real quick and then I will share the other screen. And then I want to look over some of the charts. I guess Elvis might be, hey Brian, might be doing his news signals. He's, from what I understand, guys, he's not going to share his news strategy. This is looking really good. Okay, for those of us who closed out because of a trailing stop, that's looking really good. Let's see. Super easy, there we go. So does you guys still have a lot of questions in terms of the compounding chart? Stop share. Go to new share. iPhone or iPad. We'll start with this. There we go. As soon as it will let me. So in terms of the challenge, guys, when we're taking, you guys can see that, right? So when we're taking trades and when we're compounding, whether it be with me or in your own account, like you can do this a couple different ways. You can have your conservative account, like your everyday bill pay account, which is what I would recommend. That's your account. You never really risk more than 10% on a per trade, and that's with high levels of accuracy. When you get a little bit better, you can go 17%, and that's kind of like your base account. And then you can have your high risk account, and that's the one you're going to start off with a smaller amount of money, and you're going for the gold. You're going for the six figures. Another gentleman in one of the groups I'm in just hit six figures again today for the first time. He's only been trading about 7 months. It's very doable. No, he didn't start with $10,000, $20,000. So, and I actually just got done watching a video from Brandon Boyd, who's part of IML. He's a pretty cool guy though, so I still follow him, although I'm no longer a part of IML. But he was talking about having separate accounts and why he's doing so well. And it's again the same concept. So as I posted in the group many months ago that I had several accounts for different purposes. One of them was like for what I call my dream account, like, and that's for the bigger things in life, for the things I want to do to bless my mother, the huge things essentially, for investing into a new property because I'm into real estate, you know, the bigger accounts. And those are the ones I go hard on, and I usually risk a lot more. And then of course I have my everyday bill pay account, and then one I kind of treat like a savings account. So, and we all kind of do it a little differently. I even have a few testing accounts, like where I test stuff out, only because I need some live. I prefer live over demo. I learned better that way. Although I will say now I've learned the value of demo more so than I had before. So, but taking a look at this sheet, which yes is in the group, we have several different selections. This one is not my personal one. This is one that I sent to the group. So what I'm going to start with is what I've got the most experience in and what I know works the best is this right here, which is your weekly kind of growth. And what I did basically, I'm going to go to a more moderate account. So you can see that this account starts with $1,000 and has a lower rate of growth per week. This one starts with 200, so it needs a higher rate of growth per week to still hit $1 million in 12 weeks. This one is your mid-range kind of in terms of account balance and growth size per percentage you're going for. And this is kind of just where I don't know why this one's at the bottom because it really should be at the top. This one is the absolute, in my opinion, easiest to do. So it's not so slow where it's painful, but it's also not so fast where it's stressful. So looking at this specific chart, this is how this works. And I do have this little stop loss kind of calculator here, although I recommend one of the more live apps because you can type in the pair. This entire worksheet and all of the worksheets on this is based off of only USD pairs, and because those trade for $10 a pip. Whereas some, hey Derek, so some of the trades, like the pairs, they trade at $6 per pip or maybe $12 per pip. So most of them trade at different amounts of like what the value is per pip that you're going for. So this isn't exactly dollar for dollar, but it's a really good, you know, estimation. So it will kind of come out in the wash as you're trading. So to use a specific example, let me get out my little stylus on my iPad here. Makes it much easier. So you have $400 at 83% growth. And keep in mind, your losses throughout this can kind of outweigh each other and kind of wash each other out. Essentially, in approximately 12 weeks, There's no reason why you shouldn't have hit high six figures, if not seven figures in your account. This only requires, I think, higher than 80% accuracy because it's based off of the weekly chart. Oopsie. I dropped my pen, sorry. And because this is a weekly chart, and this is what I did personally. So for instance, I have some random numbers because those of you who know me, they know that I kind of use just weird numbers because I like repeating numbers. I kind of feel like there's, I don't know, I like numerology sometimes. So having said that, these are just random. You can kind of type in your own. But I know for certain that getting 500 pips a week is not impossible. Because you got to think, if you found 2 swing trades, and even if you didn't catch the whole move, even just 2 swing trades, most of those, especially a GBP pair, run 400 or 500 pips by themselves. But Euro NZD runs about 400. Even your slower movers run at least 200 most of the time. So finding 2 pairs, and in this case I usually did 4 per week, is not impossible. But needless to say, you can pick how many pips you know you're capable of getting per week. If you know that you're wanting to do it with a higher lot size and you can get less pips consistently, like I've told you guys, going for half of the ADR or just 50 pips on a trade and then closing out, not having to catch the whole move, is a really safe way to trade, because then you're not stuck in a trade. You can find another one. So you're more than welcome to do that. But the whole concept is, if you're going for 600 pips a week, every trade you enter that week is going to be a 0.05 lot size. At the end of the week, you should have in and around somewhere around 300 bucks. Maybe slightly more, some less. It just depends on what pairs you traded and how long you let them run. It's not going to equal exact. As I've showed posts in the group, and as well as my FX book, which I no longer post in there too much, getting 2,000 or 3,000 pips even without trading US 30 or the exotic pairs is actually really easy. And that's just with a few runners. Granted, I was stacking at the time, but still I was averaging 2,000 and 3,000 pips a week, most weeks. So I think the smallest week I had when I did this specific thing was like 1,800. And Irving was getting pips like that too, actually. That's when we were really bouncing on that flip-flop method. So, and of course my swings. So same concept as you're going down. Okay, the second week, the entire week, if you're going to use this column, okay, this is the more aggressive column, you're going to stay in this lane the entire 12-week period. And even if you have a loss, this, you would have 1 win and say 1 loss. This week should either zero itself out, and or your loss kind of outweighed your win, and you kind of zeroed yourself out pretty close to, and or you should be in profit. I mean, that's generally how it should go, because when you're taking that many high quality trades, you're at 80% accuracy, you're always moving your stop loss into profit, then it's not that hard to do. But each week, that's what you'd be doing. If you're going to go the more conservative route, whoopsie, now I messed up. You would be doing this column. You'll notice that the lot sizes are smaller because you're going for more pips. So that in this case, you would either need to stack more effectively, or you would need to find more trades. So, and all this is that's risking quite a lot though per trade. So that means if you're stacking several trades on Euro USD, you would have 1 at 0.02 and 1 at 0.01 if you were doing this column right here. Silly butt. There we go. You wouldn't like have several stacked trades for Euro USD and they're all 0.03, because then you're over leveraged on a single pair. So that's how I use this one. Does that make sense to everybody? Real quick, and then I'll go on to the per trade one. Anybody there?
Yeah, that makes sense, Jimmy.
All right, thank you, DJ.
Yep, we're with you, Jen.
Okay, cool. So no one has any questions on that. So similar concept with this, but this one is based off of per trade. As I've mentioned before, I no longer do per day goals. I did it first with IML. It was super recommended. And what I ended up doing was, on days that I made a mistake, on days where I didn't find a trade, I would start to, imagine one with my eyes, and I would take stupid entries, foolish entries, trying to hit my daily goal rather than just stop trading. Or on a day I took a loss, that I would revenge trade and keep trying to hit that daily goal. And I just think that psychologically, a daily goal isn't as effective rather than a weekly goal or a per trade goal. So what I did was, as I went down to a per trade goal, these are just set up a little bit differently, but they're essentially the same thing. This one gives you less options of pips per trade. This one gives you more pips and a little more information. So we're going to start with this same concept. what we're going to be doing with the challenge is we're going to have a $200 account minimum. We're going to trade it as if it's $100. Okay, so although we really have $200 in there, we're going to act as though we only have 100. We are going to be using 2,000 to 1 leverage. And I think the max amount I'm willing to go, Pat and I are discussing that. He's praying about it, but the max amount I'd like to go on a public group is 30% per trade, and I think that is even a bit high. But we'll see. We're talking about it, so we'll let you know in terms of that. But the idea is, again, very aggressive is going for less pips. Going for more pips, your lot size is smaller, so it's more conservative. Whatever lane you decide to choose, you need to make sure you stay in that lane, because if you're here and then you go to here, you're messing up the calculations. And I don't need to go into super complex math, but basically your account isn't leveraged enough for this trade if you've started here. So same concept. If we're going for about 50 pips per trade, which is what I'm thinking, which won't always happen. Sometimes our trailing stop will get knocked out. Sometimes we'll get knocked out in profit, because I always recommend you move your stop loss into profit. Either way, those little ones are just going to kind of count as your ability to kind of whitewash any losses and or whitewash, the next trade. So some of them will be runners and some of them will have closed out early. You'll have permission to re-enter if you choose to, if the setup is still there, has been made, and you don't have enough rules to clarify your re-entry, you should not be re-entering. You guys know that I trade very safely. I just got better at not chasing the market, not following everybody in the chat and saying, woohoo, gotta go check this out. Oh my gosh, US CAD is falling. Guys, US CAD was not ready all day long, and it's still not ready. Last time I looked, people lost their butts on that trade. Like every group that I'm part of tried to sell that trade, and it's totally not ready, because everyone wants to catch something at the top rather than waiting for the safer move. So any of you who know how I trade, then you know that I'd rather wait. I'm okay with waiting, and I'm okay with finding the safest one that's actually going where I want it to go. So, but either way, that's what you'd be doing. You'd be going for 45 pips at a 0.07, a 0.09, and so on. Essentially, if we do it this way, it will take us less than 40 trades to hit $1 million. Now, mind you, we might have a loss here, which won't break the bank. That's right, Brent. That's just who I am. Like, it works. I've tried the other ways, and they work too, until the day they don't work, and that's a sad day for everyone. So, but either way, less than 40 trades, and it is very doable. I mean, I want to give some room in terms of losses. I want to give some room in terms of how you manage your trade, because yeah, so we have a loss on this day, that won't break it, but if we have too many losses up here, this will break it, which could happen. I mean, this is coming in, this is probably, hopefully, depends on how the timeline works out in terms of Pat, but I don't want to be too close to Christmas. So either way, that's all we'd be looking at. Is all we need is approximately 40 trades to hit $1 million. 40 trades. 40 winning trades. And the ones that kind of close early, you go with a very aggressive route. So if you choose to stack these trades, you have to know that because we're doing such a high percentage, guys, you guys cannot decide that you're going to take trades in this account. You cannot decide to take 3 signals. So because Pat has decided to do the signal group route, and again, I'm still going to go live. And sometimes y'all will be able to jump on because you have time. Sometimes y'all will be busy. I will have a scheduled time, but other times I might just see a trade and I'll say, hey, I'm jumping on, guys, come on. And if you're available, great. If you're not, that's fine. Again, we can kind of hang out and just kind of create that family atmosphere. But to answer your question, what I would really like you guys to do personally is I would like to do something along these lines. And it takes a little bit more knowledge, but we would duplicate this. So here, let me see. But let me use my finger. It's not going to let me now. It just had it. I'll duplicate this real quick. If it will let me, sorry guys. Whatever. The point is that I was going to show you is I would have us have 2 of these same exact worksheets up. And that's what I would do. And here's what we would do instead. So instead of doing 30% per trade, we would do 25% as our heavy position. We would have a 50 pip take profit. So you kind of pick a lot size in between these two. And then you'd have another position on that same pair. So for instance, if we said sell Euro USD right now, this is our entry, this is our stop loss, you would take 2 entries. One of them would be 25% in terms of risk, and this will give you your lot size. And then the other one would be 5%. And the purpose of the 5% trade isn't necessarily to quote unquote grow your account. It's not even necessarily to make money. The purpose of this trade, how I do it, is you guys will notice, let me go back to the 25%. This lengthens the amount of time. There you go. So now instead of less than 40 trades, it would be like less than 42. But the purpose of that 5% trade would be your runner. That would be the one that kind of helps outweigh a loss. It doesn't eat up a lot of leverage, and it doesn't take up all the room in your account, but it allows you to get those extra, let's say that trade does end up running for 300 pips. It allows you to get that extra 200 pips at 5%, which isn't a whole bunch, but it's enough to outweigh the loss. It's enough to balance out a bad day. It's enough to kind of make up for the trade that went against you and was in profit and then went against you real quick. So it kind of closed out at a small amount of profit. But that would be my preference in terms of how we did it. Again, some of this stuff is up to Pat. He's working on some things on the back end. But that was my original plan. It was 25% as your heavy position and 5% as your runner. Again, the purpose of that 5% is never in terms of account growth. It's in terms of this is going to make up the loss. This is going to make up for that one trade that maybe closed out with our trailing stop or something. So we only ended up getting like, say, 20 pips out of that trade instead of the full 50. It's going to balance out moments like that. Because here's the deal, guys, even if we ended up getting to, for example, 50 trades, let's be honest, most of us can find 4 to 5 good trades a week. It's the matter of timing. Like if you're still stuck in a 30% trade on your account, you can't take all 5 at the same time. So when you compound like this, it may go really fast depending on what the market's giving us. It may go kind of slow. But on average, I'm expecting anywhere from 2 to 4 trades a week. So this wouldn't take that many weeks. But even if we ended up having some hiccups and we could take a loss, or that runner didn't outweigh something, it still is not too complicated to get to 7 figures. And I'll say again, like I've said on other nights, that my recommendation would be prosper where you're planted, be trusted with the little things, all that biblical principle stuff of be a good steward of what you have. So if you have, let's say, $33,000 in debt and your account gets to $33,000, I think it's your moral and ethical duty to withdraw at that moment. I mean, withdraw it out. You can leave a couple $100, maybe $500 because you're feeling really good, and withdraw the rest, pay off your debt, and then you'll really restart from there. So it's still possible to rebuild. But when we're not trusted with the little things in life, I feel like a lot of times God has a way of working things out, I think, in my opinion. That's just my opinion, granted. But you don't have to get to $1 million on the first try. You can easily say, hey, I have $100,000 worth of a house I need to buy it right now, or I'm going to miss out on this opportunity, and my account just hit 6 figures. I have never made 6 figures in 2 months, so I'm taking this right now. There's not a single person on this earth who's going to stop me. Take out your 6 figures, start with 500, and just trust the process that you're going to grow it again. So don't feel like this is something you can only do once, or that I will only do once with you guys. Feel like, hey, I'm going to be mature. I need exactly $200,000 to buy my mother this, to take care of her, or my daughter's medical bills. So I'm going to withdraw when I hit that amount. Because when we're responsible and when we're mature and when we're are good stewards of what the world gives us, what God gives us, then I think that we're oftentimes blessed with more. So that's just me, though.
Hey, Jenny.
Hey, Elliot.
Hey, baby. How you doing?
Fantastic. And yourself?
I'm doing just fine. Just so I get it straight, are we doing the chart that's up now is per trade, or are we doing the per week for the lot sizes?
We're going to do per trade.
Okay.
I think the per week one is 12 weeks. It's very consistent. It's slower growth, but man, it's easier mentally and emotionally because there's no question what lot size you should take. And these are all essentially meant to be runners. So notice how many pips you're going for. So if you found, for instance, even just 3 trades, you stacked them 2 times, you can very easily get 600 pips, bare minimum. The odds are you could get 1,000. I mean, I was getting 2,000-3,000 with 4 to 5 trades a week, pretty effectively and consistently. So, I mean, we're going to do per trade only because the way Pat's going to have it set up, it'll make it more consistent and flowable. Flowable isn't a word, but it is today, so it'll just help it flow. So, does that answer your question?
Yes, it does, ma'am. Thanks.
You're welcome. Does anyone else have any questions in terms of how the compound chart works? And this is in terms of your own trading too, guys. Like, if you're only trading, and you're only going in there and you're doing 0.10s and 0.05s, and one day you get really ballsy, so you do 0.5. Again, that's all you're doing. You're not doing much. You're not growing your account. You're just playing with money. So you should be compounding in some way or another, even in your own accounts.
I had a question, Jenny.
Yes, sir.
So say, what would be your first trade, and you're supposed to get, what is that, 0.3, and you don't get there. Are we just trying to get to that target balance before we move to the next section of the spreadsheet?
Yeah, and that's a really effective way to do it. So, like, for instance, if your account balance hits that, you have a couple of options at that point. You can either A, move your stop loss up and let it run, like until you get a new signal. My advice would be move your stop loss up and let it run. Unless we post and give you a new signal, why not maximize that move? Worst case, it goes and hits your stop loss. Or B, you can close out safely and wait for the next one. If that helps your peace of mind, a lot of people are successful with that. They say, hey, I hit my balance. I don't care about what else the market gives me. I'm okay with that, and I'm going to close now.
Okay, so like say you did let it run, and let's say your account balance went to 244. Would you skip trade 1, 2, 3, and 4, or would you just keep building and keep use the lot sizes as they go? Like stick to that no matter how much you make.
So I've done it both ways, and in theory, that whole skip to this line sounds really good. But I personally think that, okay, so say the first trade we find is fantastic, we let it run, maybe we didn't find another trade for a couple of days. So yes, the first day we ended up with 244. But in my experience, here's the deal. The next day, just stay with this, because what's going to happen is the wins are going to eat the losses. But if every time you have a great day, you skip 10 lines up, you're not there, does that make sense?
Yeah, and it's like less of a shock to like gradually move up to that account size. I can see too.
Yeah. Plus, like, you freed up a whole bunch of margin. So now you're trading the balance as if it's $156, although in reality, there's $244 in there. So now you're less of the
more trades.
Yes, you can take more trades. Number one, you have a less percentage of a chance of getting a margin call, because like I've said before, guys, trading like this, yes, you have a chance of blowing your account from being wrong, from a stop loss, okay? From taking one long trade, especially as we get up to here, these lot sizes, particularly on this side, as you guys can see. Yeah, one wrong time, one time, and they spike the spread or something, you're done. You will blow the entire account. It is gone. All $246,000 are gone on a margin call. So those times where you gave yourself a little bit more margin to play with, a little bit more free margin to play with, it's going to help prevent you blowing your account.
That makes sense. I like that.
That's how I would say do it, is no, we're not going to just skip ahead and get super cocky, which I've been known to do. I did that, and I didn't do well at doing that. So
I'll learn from that.
You can learn from my mistake, and then we all win from that. So, because I blew a lot of accounts to learn that.
Right on. Thank you.
You're welcome. Avery, you had your hand raised. Let me go to the participants. Can you?
Hey, Jenny, how's it going?
Wonderful. And yourself?
I'm doing well, thank you. I'm so glad that you're bringing this topic up. This has been life-changing for me so far. That little baby account that I told you about a long time ago, it finally made it to $400.
Nice.
And then my wife booked a trip to Vegas, and I have to withdraw.
Hey, withdrawing is the best thing you can possibly do, though, because it makes this very real. So even if you only withdrew like $50, it makes it feel real. So that's kind of awesome. I'm glad you're withdrawing.
It feels very real, because as soon as I saw the bill, I was like, well, time to take it.
There you go. That's awesome, and that's mature too.
Thank you. So my main thing, because when I first started using this the spreadsheet, my toughest issue was cutting my losing trades. So I kind of set up a rule for myself on this program. I followed your risk management calculator, which has been extremely helpful. But there are times where I'm still running into like losing trades. So I don't want my losing trade to eat up 30% of my account. I want to be able to cut my trades early if possible and let my winners run. So what are some of your techniques or some of your rules that you use to help you with cutting those losing trades early? Or you just find them, or you just stick with the best ones at first?
Well, that's what I'm saying. So like if we, for instance, if we look for trades, for instance, on Monday night, and we pick 10 to 14 that look like they were setting up, and now we're going to weed out the news, we're going to weed out the ones that are the least likely, okay? And now we have 10 left. Now we've got 5 left, and so on. I'm going to pick the ones that have the best stop loss as one of my decision factors. Sorry. Let me go back to that. There we go. And the reason being is because there's everyone who says they don't trade with the stop loss, I mean, that's more power to them. I know a lot of people who say that and maybe do, but in my experience, that's not a good solution. So we've all tried that, and we've blown enough accounts doing that. So at least if you're asking me, that's not the way to go. Tightening your stop loss, probably not the way to go, because as we know, brokers will widen the spread. You can get just wicked out of the trade. So that's also not necessarily the best way to go. Your only decision there is to pick the highest quality trade. I mean, especially when you're trading in like this, with this level of risk. So if we're going for, because Elvis does a 60 pip stop loss. So if I were to call a trade and we're going to try to follow suit, then I would need to call a 60 pip stop loss, which means I want my take profit to be at least 60 pips, because I'm not taking any trades that have less than a 1-to-1 ratio. That is like my bare minimum. And most of my trades have like a 3-to-1, 4-to-1, 5-to-1 ratio. That means I'm going to gain 5 times more than I risk losing. And what that means is that one win will outweigh 4 losses essentially, right?
Right.
I'm still in profit if I only won 1 trade and I lost 4. So to do this, I mean, your risk reward ratio needs to be super relevant. And I unfortunately don't have a ton of control over the setup of that. So how do I recommend you do it? Again, don't choose the furthest away stop loss. So don't choose the highest high, choose the next high. Because once and I'll have to show you, remind me when we get back to the charts, but once it breaks out and makes a new high, that trade is now invalid for the sell, right? So why are we going to risk more? We can always re-enter, but risking that extra 100 pips is just bad money management, unless you know you're going to get 400 pips, which is unlikely.
Cool. So basically, your general rules stick to the 1-to-1 ratio.
Minimum.
Minimum. Looking for only high quality setups, and yeah, basically those same rules that you have in your document. Those are going to be the ones that we're using when we're in this program.
Yeah, I mean, so those were the ones we kind of typed up together. I did a call a while back, and just to give you guys some ideas, we have, I don't know, we probably have like 100 different choices of a confirmation. But now it's a matter of we choose the confirmations that we want. Oh, the screen is blacked out. Sorry, guys. Well, does anybody still need to see this spreadsheet, or can I go back to my screen? I'm going to go back to my screen.
Yeah, I think you can go back to your screen.
Okay. So you guys can see my, yes, now, right? You guys can all see this?
Yes.
Yes, we can.
Yes.
So like the gentleman who just asked, this right here, here's the deal. If it breaks this low, your sell is no longer, your buy is no longer valid. So tighten your stop losses up. I mean, at least reasonably, not so much that you're going to get wicked out. But the key there is just that 1-to-1 risk to reward ratio. So if we took this trade here, for instance, at the 8 and 18 crossover, right? This would be our stop loss. And this is a slow mover, so it's not really a fair example. But let's say our stop loss was 30 pips. I want to go for at least 30 pips, if not 60. Because if most of my trades have a 2-to-1 or greater ratio, I don't have to be 100% to still be profitable. So while you guys are working on your accuracy, the number one thing you can do to help you be profitable is going to be only take trades that have a 2-to-1 risk to reward ratio. Because in that case, you only have to be right, like, I don't know, I forget, but I knew all that stuff. I had it all written down and taped to my desk. But either way, it's like you can be right like 40% of the time and still be profitable with the right risk to reward ratio. That means you're losing more frequently than you're winning, but you're still winning at the end of the week if you do it right. So just so you know.
Cool.
I hope that helps.
No, that helps tremendously. Thank you so very much.
Hey, good job on compounding, because that's real trading. I don't care if you compounded only to $400, because when you can effectively compound, what you just taught yourself is, now that you know you can do that, that means if you can take $50 and turn it to 400, you confidently know you can take $1,000 and turn it to 10,000, and so on. That is a skill set.
Definitely. My only thing is I just need to, because when I first started out, like I said, I will let bad trades run forever.
I did the same thing. I was like, it's gonna turn around. I was the queen of it's gonna turn around.
I was mad all day long. I was like, it will turn around. This is just market maker crap. It will all turn around, and then it will never turn around. And I have to look at myself at the end of the day. I'm like, just cut it. So
when it makes a higher high, yeah. So let's go to USD CAD. Everyone's been trying to sell that, and I don't know why. And everyone's preaching about how they made a profit on the sell, and I don't know how. But let's go to that real quick. This just happened, in all fairness. Like, everyone's been saying, well, this is going to turn around. Let me move this out of the way. It wasn't turning around. Like, it literally broke this high. So once we made a higher high, and everyone's sending out signals to sell right here, which is, I think, exactly when they sent out those signals, it had broke this high. So we knew it was going to continue going up. By how much, we don't know, but we knew for sure it was going to go up. So if it makes a higher high, you're out of the trade anyway.
Exactly. It was like that yesterday. I was eyeing Euro USD for a buy, until it literally broke like 2 separate levels. I'm like, I'm not dealing with this anymore. It was in my demo account. That's how I test out my trading ideas to see if it should go to one of my live accounts. But I was watching it all day and it was acting crazy. I was like, no way, Jose. It broke one of the levels that it had, and it's continued breaking other support dots. I was like, no way.
Well, it was a smart decision to finally learn to walk away and say, okay, this isn't for me.
Yep.
Yeah, see, this one broke out here, so I was selling this. When it broke this, I was selling.
That's exactly what I did too. When it broke the daily dots, I was like, it's an invalid buy.
Yep, that's right. So you were 100% right.
Perfect.
Awesome. Okay, thank you.
I'm all done. Thank you.
No, you're good. Thank you. Let's see. So if it will let me open this chat up. If we withdraw and start over, does the challenge stop at the million mark, or will signals and trades be given ongoing? So if we reset, we'll have the chance to go after the million again. MJ, that's a great question, and that was honestly one of Pat's biggest concerns. Was okay, because I told him that our dialogue was something along these lines. I was like, I'm concerned because once they hit, for instance, at $100,000, my hope for them would be to withdraw, like right now. Withdraw your first $100,000. I don't care what you do with it, but just withdraw it and have the confidence you can do it again. Because in my experience, like I already went through that whole spiel, I just feel like good things happen to those who make good choices. Not always. We still have life. Sometimes it hurts and it makes us cry. But in general, I think that good comes to those who make good decisions. So, and he said, okay, well then if people are afraid we're going to stop this or take a break, they're not going to withdraw. There's a 0% of them withdrawing. So that was kind of the dialogue we were having. And I said, okay, well, here's the deal. If we get to 300,000 and then we blow the account, I don't want them to super regret it, because that happens all the time. 1 second, guys. Okay. You come on in here, sweetheart. Hey, brush your teeth. Okay, shut my door, please. Sorry, that's my little guy. He's gonna come and sit in here with his little tablet as it's a few minutes before bed. So either way, like I was saying, a lot of times what happens, the psychology, the emotional investment, like that kind of happens once you get to that multiple 6-figure account, is intense. It's a lot for most of us, if we're being honest. I don't even know how many $300,000 accounts. I lost count after like 12. I quit counting because I don't know what happens. Like there's just something that happens at that moment, that maybe it's the market and I can blame whatever. So we were talking about that, and the concept is that if you guys can buy a house at 250,000, then take the stinking 250,000, take it out, and trust that we can do it again. And I promise, for those of us who kept it in there and maybe blew that account and didn't withdraw the 300,000 that we probably could have used, you're going to be the ones who are singing. And in the event that some of us continued on and we didn't blow it the first time around, which may or may not happen, I can't promise that, then you'll be like, oh man, I missed out on that other whatever. But the truth is you didn't miss anything, so we're going to keep it going on and on. He wants it to be an ongoing thing. So that is what he is working on right now. So worst case scenario, you're starting off at $500, but new people are joining the Super Easy family every single day. So we're going to have new people who are starting with $100. You're definitely not going to be the only person who's starting with $500. So if you do happen to withdraw that first 6 figures, which I really hope you guys do, 6 figures in trading is a milestone that it's eye-opening. And if you hit 6 figures and then you don't withdraw it, you never really know, you never really get the feeling. But if you hit the 6 figures and then you withdraw it, don't worry about the million will come. Take it. Yes, you're going to have to pay taxes for those of you who asked. What is that, Brent? I have sums of money that are better to cash out as far as taxes go. Anything you do that's greater than $10,000 usually gets flagged by the IRS, just so you know. And there are some banks that are still like mom and pop banks that don't really report as effectively or as often, but I don't want to be your tax advisor. My best advice is when you are at a taxable income where your liability, and if you know taxes, you'll know what I'm saying, your liability is now, your tax liability is too high, your best bet is to pay the stinking $50 a month and get an accountant. Because a good accountant will have you, incorporated and filing as an S corp, and they will help whitewash much of that income. And keep in mind, you guys can you can write off your losses. So smart investors, not to say I'm telling you any tax advice, maybe, how do I say this legally? They had a really bad week. I mean, who knows why or how they had the bad week, but they used that bad week as a reason and a way to offset their taxes. But that's just business information that I can't legally answer that question for you. So.
Hey, Jenny.
Hey, how are you?
I am good, thanks. Could you just give me some advice about writing everything down? How do we get to this place where we know we have to write it down and keep a log and everything else? Because I start today and tomorrow I forget, and I just don't know if everybody's writing it down and keeping the log and doing everything that they're supposed to do.
The odds are they're not, and that's odds are why they're losing. So what you guys will notice today, again, Pat helped me grow a lot emotionally. I was kind of in a really rough spot when I first started getting good at trading, so I'll leave all that stuff out of the story for a moment and tell you that he brought something to me I did not have, which was an ability to keep my head and my feels out of it. Like I don't know how he did it, but like who he is as a person, like he helped me grow. I can tell you concretely though, I helped him have rules. I helped him have a trading log, because that trading log has now turned his trading into the next level. So anybody who's on here who doesn't have a trading log is fooling themselves. Anybody on here who does not have rules on their desk. So you should have a computer, some water, maybe some music or a fan, depending on where you live. Literally you should have your watch list of what you're looking at, either on a marker board in front of you or on your desk, however you do it. And you should have your trading log, and you should have your rules. So if you had an office job and you worked, for USAA car insurance, I promise you they have protocols, they have things on their desk right now that they use for every person who calls in. So if you're not doing that consistently, then you can't fuss about why you're not having consistent results. You have to do it every day. It should be on your computer next to on your desk next to your computer, no matter what.
Okay. All right, I'm gonna try and do better. But
okay. Sorry to be a little harsh, but seriously, it's a big deal. I promise it's a big deal.
What was that?
I'm sorry to be a little harsh, but it's a big deal. Like I promise it's a really big deal to know why you took the trade. So like if we decided to sell Euro USD, I would need to know that, hey, here's what I saw. I didn't, let me zoom out and close this little chat real quick. Okay, I didn't really take a lot of USD pairs because of all the USD news. But there were a couple that, were worth kind of a scalp. So I saw my 8 and 18 crossover on the 4-hour chart going down. Okay, at the time I had 4-hour resistance. This arrow is a little arrow, which I follow that pretty highly, and or my daily dots. But when it broke my daily dots, okay, I was golden. We broke below the 50. Okay, we broke below this, and I didn't like how low the momentum was, but we were above, no, actually it doesn't even look like we were above the 25. But I did like what I saw in general. This was above the 60, this was above the 40, and this was, I think, slightly even back here. We had broke below the 0 line on the MACD. And my RSI, which is my purple line right here, you can barely see it, was also below the 50. So like I had enough confirmations when you count them up to sell this trade. I knew I was only going for 20 or 30 pips, and that's all I did. So, and it went 30 pips. So, but if I don't know why I took this trade, and now I go back and I'm looking at my account history and I'm like, well, what did I do wrong? What happened? What happened to this trade? Oh my gosh, what am I doing? I don't understand. Other people are winning, and we don't have any answers. That makes it really, really hard to be able to grow and to self-correction. That's what I tell my older children is self-correction. Like, because in life, we're not always going to have somebody there to tell us what to do and how to do it and what's right and what's wrong. So having some ability to have some amount of self-correction as you grow is going to make you a better trader in all aspects of the way, in all aspects of the word, and in every way you can think of. Because as you guys can see, the daily dots now repainted. That's what they're not resetting the way they're supposed to. It's kind of weird for me. But either way, if you don't write it down, we're not going to know. You won't know why you took it. You'll be like, well, maybe I was wrong, and maybe this happened, and maybe this happened, and maybe it was the news, and you won't know. So writing it down will help you correct for next time. Does that help you understand how important it is? So maybe you start doing it every day?
I appreciate your help, and I have to just say, with you and Pat, it's making me a better person. I just need to have a little bit more patience and, do what I need to do.
Yes, you can do it, I promise. Like, so you take your trade, you'll have your watch list maybe to the left, you'll take your trade on your computer screen, which is in front of you, and then the second you enter it, you go over to this notebook that's to the right of you, and you write down the trade you took, what you saw, why you took it, okay? Some people go super, they're super organized. Like, they have, what is that app? I think it's Evernote, and they'll take screenshots, they'll take notes. Like, they have a log that is second to none. Like, they do amazing. And this, I think that's Benny or his wife on this call right here that says they started taking screenshots. And when you take a screenshot of what you just entered, yeah, it's going to fill up your camera depending on what device you're using it for. But here's the deal. I've had people jump on some of these training calls that swore up and down that, hey, this was ready. No, the MACD was right here. I promise. I know that I know. And then we bring them on the call, and they're like, oh, well, maybe actually, and it's not like I'm calling them out or being mean, but that helps them learn to say, okay, so I jumped the gun. It wasn't ready. Like, I had all these things saying it wasn't ready yet, and I took it anyways. So there you go. That's a good idea, Benny. This way you can just delete the text message stream. I would never want to email myself. I despise emails, you guys. It's like a curse. But okay, I'm going to move on to the next questions. Avery, did I already get your question? I'm going to lower your hand because I think I did. Ian, are you there?
Yes, I am, Jenny. Good evening. How are you?
Fantastic. And yourself?
Awesome. Thank you very much. Actually, I do want to say thank you for something. I'm still trading demo, and I traded a $1,000 demo account down to about $216. I started this week at about $216. Actually, I traded it to a little less than $200, and I came into this week because a couple of trades I made last week, sticking to some rules that you mentioned a couple of rules that I should try to put together for myself, and I did, and I promised myself I'm going to try to at least stick to them for 2 weeks. So when everyone in the group is like trying to go with the, with all of the stuff that's been going on lately, and I'm trying to stick to the 4-hour chart as opposed to the daily right now, because that's the rules I have for myself. That's where I want to trade. In any event, my point being, you've mentioned maybe how you do things, as far as if if more things line up in themselves, you go in a little bit harder on those particular trades. In any event, I came into this week. I started this week at $216, and now I'm, just on 2 or 3 trades, I'm up over $400. So I've doubled my account in the space of 3 days now.
With only 2 or 3 trades, right?
Correct. With only 2 or 3 trades.
See, that's it, guys. So anybody who I've worked with personally, they'll tell you honestly, what I tell you to do is create the rules and follow them for 2 weeks, and don't fuss at me. Don't ask a ton of questions, but just do that for 2 weeks so we can know what we can tweak. And most of them after 2 weeks go, oh my gosh, it works. Most of the time after 2 weeks, they're huh, wow, I can't even believe it. It's amazing. And then so I tweak a few things. So I'm so proud of you. That's awesome.
No, thank you so much. I mean, it clearly works. Like I said, I'm still trading demo, but when I had my personal biggest trade was $133, which it closed today. I started it last night, but it closed today. Hang on, I can tell you right now. It was AUD JPY.
Nice. For the sell?
Yeah, it was a sell. And I went.
The 4-hour chart?
What was that?
And you were using the 4-hour chart?
Yeah, I was using the 4-hour chart.
And you had enough things lined up that told you to sell, right?
Correct. And I went a 0.20 lot size. I guess, what is that, $2? But yeah, it worked out nicely for me. I don't know, maybe 70 pips or so, something like to that effect. But it was $133, for me. So I was like, wow, this is for me, that's I've been trading for several weeks, trying to learn this thing now. I've only been in the group now 3 weeks, but I've been trading a month before that. And yeah, for me, that's my personal biggest win. And even though it's demo, it felt pretty awesome, because I'm still new to this.
Well, you're doing great. There's people who haven't hit that level at all. So you're doing great, but just follow those rules. I mean, as long as they're matching your rules, when you entered, I mean, I can't control that, and we know that it was kind of selling. So I would have taken that trade actually on this chart. I think I might put my foot in my mouth. Is it this one or this one? One of these two. But it would have matched literally all of my rules on this chart. Literally probably all of them.
Yeah, it felt, like I said, it felt really good. I mean, once I saw everything line up. Now, there have definitely been times I took a trade last week that I thought, yeah, everything looked good, and it was completely going against me. And I let it run for a while. When I got in from work, I'm like, why is this thing at such a loss? And when I look back at it, I ended up cutting my losses on it. But when I look back on it, I realized, yeah, you know what? It really, everything didn't, like 1 or 2 things didn't line up the way I thought they did. But for some reason, my eyes saw it that it had. But when I look back, I'm like, nah, it couldn't have. So I took I took a trade that went against my own rules, and I had to end up cutting my losses on it because it would have eventually hit my stop loss. But so now I'm a little bit more careful about making sure. And that trade, the Aussie yen, that felt amazing to accomplish that. I was like, wow, this is like I can see where I can actually, or at least I can begin to see how I can actually make a living doing this.
That's awesome. In terms of your guys' bill pay account, you don't even need that much. So for instance, if you keep a steady $1,000 to $2,000 in a high leverage account, or even Hugo's Way is my favorite, but for a high leverage account, I use AFX. $1,000 to $2,000, and you're going for 50 pips or half of the ADR. Finding a quick trade is easy. You enter, you only go for 30, 40 pips. You could make that fun and seriously. So you got your pips. This isn't a fast mover. and then you're out, and then just do it again, do it again, do it again. And even on these baby moves, it's too easy. This one was hard. This one would have been awful, but either way, the stop loss isn't too big. So I'm so proud of you. That's awesome.
No, thank you so much. And what I have not started to do yet, and I need to, is create a trading journal for myself. I have not done that. And I definitely want to start doing that. But we can talk more about that. But is there anything that you recommend, or just plain old paper and see? Because I don't know, like, well, exactly what should be on it and what should it look like? Should it be an Excel spreadsheet? Should it be just a notepad? I'm probably overthinking it, but that's kind of what I do.
No, it's okay. You sound like me, asking a billion questions that we think really matter. I did the same thing. So, I tried it on my iPad for a while. I was trying to get all organized and digital and pretty, but I just do best in like a regular old, plain old comp book. What you really want to have on your watch list is what you're watching, why you're watching it, what time you saw it, where you put your stop loss or where you'd enter, all that good stuff, or what you're looking at on your watch list. Because then it saves you time when you're going to look for a trade. What you really want to have on your trading journal, and I've seen some really fancy ones, and then I've seen some pretty plain ones. Mine are pretty chicken scratchy. I write down what pair it is, what time I took it. I usually don't write that down because that's obviously my trade report, but I'll put like 9 a.m. so that I'm not like super specific about 8 a.m., 8:03 or whatever. I do, on the other hand, say what pair it is, what I saw, okay? What method I was using, like trailing stop loss, take profit. I put that down as well because that's really important, because sometimes you're going to realize that if you were placing your stop loss at the first daily dots or something, it was too tight, or you're going to realize that you were only using a 20 pip stop and you didn't have a reason to be. So I write down the way I was managing it and why I took it. And then when I go back, like Pat said, he highlights it. That's what I had told everybody originally, was you highlight the winners. And y'all can see in the groups, I quit posting them, but every week I have some chicken scratch stuff of how I did it. And that's what I did. So your information is what you need to know that would either save you from entering a bad trade next time or help you enter the right trade next time. So that's the information that's really important in your trading journal.
Okay.
And only you can decide that. So.
No, I got you. I just want to be able to give myself a good picture of what it is, because I want to become a better trader. I mean, that's it for at the end of the day for me. I want to become the best trader I possibly can be, because it's, the more money I can make is the better servant I can be. And that's what I'm trying to do.
Oh, see, that's beautiful. I love that.
Thank you.
You are welcome. Well, then do so. And you guys, you only need 70% accuracy to be considered a master trader. You know that?
Yeah. Up until last week, I'm pretty sure my accuracy was somewhere about 5 or 10%. So yeah, I wasn't doing very well. I wasn't doing very well at all.
Okay. Well, that's insanely low. That means you were just trying everyone else's strategies and picking signals.
That's pretty much what it was. I was just trying something. If somebody does this, yeah, let me try that. Somebody does that, let me try that, just to try to see something that actually can work for me. So you kind of simplified things a little bit for me. Last week, some of the things you said kind of sunk in. So I'm like, okay, I'm just going to do this. And I don't care what else happens around me. I don't care who else is making what money. I'm just going to do this. And so far, so good. It's working for me. I've had some losses, but my winners have offset them. So it's been, for me, exciting.
I'm so happy for you. You're right. I'm guessing what I said last week, guys, was that we can't become, proficient at anything if we quit and we keep trying everything else. So pick one thing, and you're not allowed to quit that one thing until you're proficient at it. Because you're not allowed to quit until you get it, ever. However long that takes you, just don't quit until you are actually 70% at that strategy. And then you can find a new one and you can pick a new one. But don't quit until you actually know it. Otherwise, you know pretty much a whole bunch of nothing. So, but awesome. Thank you so much for sharing, Ian. I super appreciate you.
No, thank you so much, Jenny.
Awesome. Okay, so Anton, is there any chance you might be giving signals? Yes. So what we're going to do, and that was another one of Pat's concerns, was trying to get the signals to everybody, because we all know the Asian is not a super great time to enter high risk trades, only because most of us go to sleep because we live in the US. And that's like a super lot of pressure. As you guys saw on that lot size, could you imagine having 100 standards on one trade and going to sleep that night? Like it's mentally and emotionally hard. So the current concept is he's got some things in place, and I'm not allowed to keep talking about it. Also, I'm trying not to be too specific, but we will go live, and we will also, so we'll have live trade rooms. Everyone's will be set up a little differently. I'm hoping mine has some music and you guys are talking, and maybe some of you guys get on your Zoom on your computer and we all share screens. So not just one person. Like you would share your screen and say, hey, Jenny, this is what I'm looking at, or here's what I see. I'm like, okay, cool. Well, you know, what do we think? Collectively as a group, when we're hanging out, and we will also, whatever trade we do take, we will also post it in a Telegram channel. So that is the concept of what we're doing. This way you have the access to it. But from what I can tell as of right now, I believe there's going to be more signals than you guys can possibly take, or more accurately than you should take. So don't worry about getting a signal. Worry about when you get a signal that you can analyze it according to your rules, that you know, hey, I'm in this other trade. Am I willing to cut it short? Or do I have enough free margin? You have to know those things. Like that's the stuff you're going to need to know the most of. So I wouldn't worry about whether or not you find a trade. Treat it like a business, record, review. Very good, John, that's correct. That's the only way that I've run several other businesses, so yeah. And to the Ian, actually some things are caught, some things are taught. I learned that from my business coach a long time ago, and it hit me, that whole concept of some things are taught, but like you never heard it, and then some things are caught. And for me, that was like so profound. It was so awesome. So
I like that. Thank you.
You're welcome. What do you usually set for a trailing stop? Again, that's personal preference, and it varies highly. So like if we're on Euro GBP, other than this week, this one is a very slow mover. Like it's very slow in general. It's worth the most per pip, but it's like a super slow mover. So this one, we're not going to have a 40 pip trailing stop. But like on GBP USD, for example, we need like a 40 pip trailing stop. So that's a variable question. My preference is if we were buying, here, I'll move this out of the way. If we bought somewhere in here, we broke above the 50, everything lines up. Notice how perfect this is, guys. There's, even without the arrows, we have daily dots, 4 hour, we have super wide volume and momentum, a lot of power here. Everything is saying buy, and let's say we take it here, okay? Well, this goes for, I don't know, 500 pips, but you have the option to keep it running depending on your free margin. You have the option to move your stop loss up, which is what I would recommend until you guys are proficient with the trailing stops. Make sure you're just moving your stop loss up, and you can do that. When this appears, you can re-enter even. Like you guys have a ton of options, but you're going to have some amount of self-correction and self-proficiency to do this effectively, because I cannot manage your account from here. So you guys got to make those choices for you. Eric, hey, welcome. First time, huh? Where are you from? Can you talk? No. Oh, you're from Virginia? Awesome. So my ADX, let's see, and spread, ADR and spread you have on your charts. Oh, this is called the bar alert. It's in the group notification channel, so please search for it. If not, you can message me and I'll send it to you. Be careful, there's a few versions out there that are somehow bugged and like they're not working properly. I don't know why, but this gives you the same thing as that super famous trader VP Morgan talks about, ATR. So it's basically the same concept. It's basically a volatility calculator. It tells you how many pips this moves on average per day based off of this week, last week, and 3 months. So instead of it being this huge oscillator, it's right here, nice and tiny and compact. You don't have to go to a website to get it. It has some other features I usually disable though. This is called the bar alert, and it's inside the Telegram chat notification group. I hope that helps. Brent, should we use 2 different brokers for the $1 million challenge or just separate accounts? Well, you can. Now, somebody taught me something really cool in terms of the brokers. So you guys know technically you can download 2 of the same MT4 platforms, provided you rename the second one upon download. So it's a little complicated, and maybe I can show you. But if you're going to use it on the same broker, you'd have to have 2 different MT4 platforms that you're logged in to those 2 different broker accounts. So you know. And that's up to you. Like, Hugo's Way has the least amount of market manipulation I've ever seen. Like, they don't play with your money, ever. Coinex, theirs spike pretty big, primarily only because they're very small spreads, so their spikes feel very big. And AAFX is kind of, they don't spike near as much, but their spreads are higher, so you feel them definitely. So having 2 different ones may not be a bad idea. Like I said, have 6 accounts ready to go. Because when I do it, I mean business. So.
Hey, Jenny.
Hey, Brian.
Hey, I got a question for you. When we start this challenge, right? You and Pat are gonna be the ones calling out the trades, or is it gonna be also Irvin and Elvis also?
I believe it'll be me, Pat, and one other person.
And wouldn't that cause y'all got like different trading styles, so we would have to study y'all, right?
So that's a really good question. Again, that's something that Pat is talking about and praying about. So you guys are going to have to decide. We don't know yet. I don't know how to answer that. So you're going to have to decide of how you want to do it. He's kind of the boss. Again, guys, this is his group. So I don't know what I don't know at this moment, but I agree with you. The trading styles are different. Pat and I both swing trade very, very effectively. Mine tend to be the very slower entries, and I'm going to give a lot less of them. I like that, Rory, if I said your name right. But mine are very, very accurate. So, like, I have verifiable accuracy, no question, no one can deny accurate. And I'm not going to give a lot of them. I'm not going to play around. I mean, we can hang out and look at charts, but I just don't do it often. But I don't have very many losers either. So.
And you were saying though, right? It would be like what, all together maybe 12 trades a week that we probably won't be able to take them all. So I want to say, like, could you like just follow one of y'all doing this challenge instead of like trying to follow like 2 or 3 different people?
That's a really good question. And on that, I'm actually going to disagree. And the reason why is, although I'm not going to fib, it's a bit frustrating. It's a bit hard to swallow. But I do think that having multiple people in this is an asset. Now, how to navigate and maneuver around the complexities of it is obviously difficult and challenging, and we're working on it. But I do believe having multiple, master traders is an asset to you guys more so than anybody else. So yes, you guys will be able to take a chance. The blessing is ready. So, Brian, you're Brian, right?
Yes.
So let's say that, where do you live?
I stay in Charlotte, North Carolina.
Awesome. I want to go up there soon. But okay, so you're in North Carolina, you're Eastern time zone. Let's say that I'm up for New York. Great, I'm taking a trade. But let's say that the people who live, like, are sleeping in New York, and they can't sacrifice their entire life every night for their time. So maybe they're only up in the evening Asian session, in which case that's where Elvis comes in. I don't enter high-risk trades at the same time he's going to enter high-risk trades. So in that concept, he is an asset. So I pay more attention to the daily dots, the 8 and 18. I pay more attention to my oscillators, like, and I'm going to take this super slow entry. I typically have less drawdown, but I also, like, my trade takes time. So you guys, because we're only doing 30%, I'm relatively positive that you can afford to have 2 to 3 trades open at a time on a 2,000 to 1 account. I'm playing with that in the back end, and I'm trying to make sure I can be 1,000% accurate for you. That's another reason why I want to go to 25%, is because it's a little bit less risk, and then that runner will keep you up and going, and this way you close out with a smaller number of pips but more accurate. But needless to say, we're working on it. I do believe what Pat is trying to do is an asset to you guys. I know some of it's a bit confusing, but having other people to follow isn't necessarily a bad thing, because Pat's signals, he did signals for a couple months, and most of them were good. Like, he had a few bad weeks out of like 5 or 6 months, and that's it. Just so you know, like, people were winning a ton with his signals. And as you guys can see, Elvis is making waves in the group. From my understanding, he's an expert trader. He's been around for many years. He was also approached by IML to become a teacher. I don't know if I'm allowed to be saying this, but I am, so God forgive me if I'm not. But either way, he's got some skill. And the plus that he brings to the table is in the evening times where Pat and I will not be taking a trade. Like my trade might be held over that time. So for those of you who took, let's use a real life example. Just something practical that we can discuss. So this is somewhere around the time I'm going to be trading, right? And I take this trade. I'm happy with this trade. For those of you who entered here, great. You got your pips, okay? Maybe you let it run. Maybe you saw these dots right here, so you got out, okay? And for those of people who were asleep and maybe they didn't get to their chart here till here, and they don't have the ability to read that, hey, this is still probably a pretty good buy. Like we're still above the 8. We had a nice little pullback. Like this has got a ton of momentum. This is still good. For the people who are afraid to take the signal, because a lot of people are going to be terrified if it's still a good signal or not. And I would be too. I get it. Like you're going to have somebody else who may be called a trade in around this time frame. And if you're still in this one, cool, don't take this one. And if you're holding this one and you're comfortable with that, you keep moving your stop loss up, you don't have to take the next 10 trades that come out. In fact, your best bet is to trade less. But we have to have a solution that's going to be good for everybody in the group. And it's a big group. You guys, we have people from all around the world. So like there was a couple people who just DM'd me on this chat. I don't want to bring up their names. I agree, Anton. I know. But we're trying, okay? I'm sorry. We're trying. That's all I got. So it's not my rules. It's not my group. Pat's doing what he thinks is best for everybody. So he's the boss, and I trust him, and I believe in him, and I love who he is as a person. So that's got to count for something, okay?
Okay.
Amen.
Okay.
Hey, Miss Jenny.
Hey, Mike, too. How's it going?
Hey, I'm wonderful. How are you tonight?
Wonderful.
I'm quite sure everyone is very excited. We are very appreciative and very excited about what is up and coming and what y'all have in store for us. However, will we be as far as the challenge go, will we be mainly doing 4-hour trades, or will we be scalping and everything too, or what?
I'm not going to have you guys scalp. Like,
Okay.
well, because think about in real time, ready? So in real time, if we go to whatever chart, I probably have one up somewhere. In real time, let's go to the 5-minute chart. Okay, and I say, hey, we've got, let's come over this, if as soon as it will let me, and I give you a signal right here. Well, we're on the 5-minute chart. Sometimes the connection is slow. Every broker varies by X amount of pips. I mean, there's so many variables, and I'm saying, hey, we're going for 10 pips. In theory, you'd get it. Wow, that looks like this is US Mexican. It's like, wow, that looks like a whole lot of pips, guys. Sorry, but you get the drift. So much can happen in these milliseconds, and then the trade is done. So I've been on a few live calls who were doing the $1 million challenge with 10 pips. It was actually a lot of fun, like, because you just hung out, like you pick your trade, and now you're done trading. So we pick this trade, right? We say, hey, everything lines up here. I'll draw a line of where we pick it. Right there. No questions, no comments, no concerns. And this one obviously happened to work out fantastically. Yay us. But you have like literally seconds to enter this trade. So if we say, hey, we broke below, we closed, we are entering right here. And yeah, in this case, we would have got our 10 pips easily. This is a pretty fast mover. You have the choice to hold and then keep moving your stop loss up. I even have some little nice tool that will allow me to have like a 20 pip take profit with like a 15 pip trailing stop and then a step, and then like it'll protect 7 of the pips kind of mentality, which is perfect for scalping. But this happens in a split second. Other times, ready? I don't know if I can find a great example because life is funny this way. Let me zoom out. That's an ugly wick, guys. That's not pretty at all. You see that wick, what happened on NZD? So let's say we sold, well, I just need a bad example. Can't think of one.
I actually have another question about a pair.
Yes, sir.
Okay. I actually entered in on a Euro USD on the 4-hour.
For a buy?
And, no, for a sale.
Okay.
And my rules met up. You know, I had the resistance dots at the top, at the 8 and 18 cross, and cross below the 50. So I got in, and I got up to about 12, 13 pips. And then now, for the last 2 4 candles, you know, I got resistance dots there. So
It's reversing, yeah.
Yeah, I don't know how do I don't know how to trade that. Do I get out? Do I stay in?
Okay, so that's a good question. So let's go to this more naked chart. Let's take a look. We're into the 4-hour. And the dots have really been repainting a lot. Like, I don't know if it's me, it could be me because I'm human. But either way, I've been resetting my chart an awful lot because of the way they're breaking through. But let me pull it up real quick. Right on this chart, kind of pretty naked. As soon as my computer decides to listen. 1 second here. There we go. So on a naked chart, plain, well, this isn't naked, but more naked-ish, we still broke a trend line, correct? I mean, I don't have to draw it again and fuss with my thingy. So we broke that trend line. We still have an 8-18 crossover. We played around here and kind of tickled the 50 for a while, and then we broke it, and we made an impulse a lower low. So just for visual purposes, I'm going to add fractals. Okay. So we know that this is going down. Like, do we know how much? No. This is probably now officially tested about 50% of the move, not quite. Do we probably have one more push down to complete like the 5-wave or 3-wave correction wave on the Elliott wave theory? Probably. But currently, I mean, I don't like how the momentum is right here, but I still see this as a sell. It doesn't mean that these dots may not be respected and this might come all the way back up, which is very possible. It's the London session, but there's a good chance that this is going to come up somewhere into this period. That's about, so maybe 20, 30 pips, okay? And then drop. So it's going to come up and retest. I mean, that's what I would see. I wouldn't get out of this trade. So for instance, here's our previous, a previous fractal, not the previous. This is the previous. But here's a low right here. Here's the middle of this engulfing candle, this momentum candle, right? That's where I see it kind of going to. Now, if for some reason it breaks this high, this fractal high on the 4-hour, then okay, take your loss, and that's okay. But if you entered, I'm assuming you entered on this candle, right? Maybe?
Yes.
Yeah, probably. I mean, this is it. Everything is crystal clear in hindsight. Like, so when we look at the chart, we're like, why can't I get it? Why can't I get it? But if we always move our stop loss up, we don't get stuck in moments like this. Yeah, sometimes we miss the move. But worst case scenario, it comes back up and retests, and then you re-enter. So it's all in terms of how you want to see it. I still see this as a potential sell. I believe the triple arrows are saying something else. Let's find out real quick together. Well, isn't this just lagging today? At least you guys can see my little time bar, hourglass. So the triple arrows are saying buy. I mean, which is what I thought, but I could have been wrong, so I wanted to double check. Worst case scenario, we pop up to the average daily high, which that's just too many pips. But that would kind of match suit in terms of this previous high. So, but again, guys, US dollar has a lot of news. So when I said I took this trade, I took it at the break of that daily dots that were here, and it was at the 50 moving average. So like I only got 20, 30 pips, and then it closed. So I don't even think I'm still in this trade, but I still see it as a potential sell. Be concerned when this comes above the MACD. Be concerned when this crosses back over and momentum is up, or when your currency meters are telling you otherwise. But currently, US dollar is very strong. And this stuff could drop it, but for right now, US dollar is super strong. So, and the euro is simply not. So you have a good chance of getting out of that trade in profit. We'll just have to see what happens.
Yeah, I closed one of them out in profit, but I let my runner stay on, and my runner is now in negative.
Okay, but so how big was your runner? So did you do like it in percentages? So your first position was X amount, and your next was X amount?
Yes, but I just been still just doing a 10-cent lot size because I'm still really new to this. I only been trading like, well, 6 months, but that's still new to me.
Hey, there's no shame in like your learning curve. Seriously, I don't care if it takes you 6 days or 6 months or 6 years. It's life changing if you choose to stick with it. So, I mean, your best bet is to see what happens. I mean, this kind of peak down, it definitely has to retest some amount. You can be super conservative and say, hey, if it breaks right here, I mean, but that's exactly where it's going to retest. By then, the 50 will be here. I mean, so you have to kind of see it however you need to see it. But I still see a potential sell. This right here could be a very determining factor in terms of whether or not it actively plays out that way. In fact, that probably is the only factor that's going to push it. Either way, it might even consolidate until that, because we've only got a handful of hours until the first one.
So you said you actually entered that trade?
I haven't played with a lot of US trades. I really liked odd USD though, and I entered it when it broke right here, when it made a lower low.
Right there. And you say you just got 20 pips and got out. What, you just went for half of the average daily range? That's how you came up with just only getting 20 and closing out?
So if I see a setup, okay, so let's go off of the triple arrows. Let's go kind of with the daily dots. So again, we're still on US 30. Euro USD 4 hour, and this is what I saw. What you guys have to realize is when price makes a lower low, so this right here stalled out. We knew it had to break out, but we were fair and square below the 50, right? But come over here, we get this nice doji, which is an indecision marker. I wasn't super confident in terms of this, but at the time I was kind of playing with the hour chart a little bit, working on my fractal stuff. When it busted out of that, yeah, so you got an engulfing candle. We know this is going to sell. We have an 8 and 18 cross. We had 4 hour support, and yes, the daily was technically down here. So I was waiting and waiting and waiting. When it came back and retested this 50, somewhere in and around this range, everything lined up. I took it for that 20 or 30 pips. I'm sure I got knocked out somewhere. But in general, it went for 48 pips, give or take, depending on where I entered. So when I tell you guys getting half of the daily range, depending on what it is easy. You don't have to be right to get it, is the point. And the more you guys can realize that, the more accurate you're going to be. So this one is kind of an ugly one, granted, but similar concept depending on where you entered. Even on this very ugly, non-appealing, non-confirmed move, your chance of being right with the right rules and the right management is exponentially higher if you're going for less pips. So does that help?
Yes, it does.
Hey,
No.
Jen, I got one quick question for you.
Yes, sir.
Can you do me a favor? I need your expertise on something. Okay, on the US 30 on the 4 hour.
Why are you looking at US 30 on the 4 hour?
I'm just looking at it. At it. I'm just wanting to know, okay, on Hugo's way, if I'd have put a 0.01 trade on that one, right, from the 1 o'clock candle to and rolled it down all the way down, could you tell me how much that would be?
On Hugo's way. So theirs is, I haven't traded US 30 on Hugo's way in a while. I prefer CoinEx because they do it all funky, but I love it. So this is the 5 o'clock. This is the 1 o'clock. So if you had entered right here.
Okay, yep.
What, you would have made $250, give or take?
Hold on.
I mean, don't quote me, but I mean, give or take $250. I could definitely be wrong. Every one of these brokers calculates a little differently, and I haven't traded it fair and square on Hugo's way in a while, so But
Gotcha.
I'm pretty positive that the answer is in and around 250 bucks, depending on exactly when you entered, what your spread was, and how their commissions work with that pair.
No, go up to the 1 a.m. candle.
Oh, 1 a.m. I apologize.
Yeah.
So that would be this candle is 1 a.m.
Right.
If you would have rode that all the way down, you would have probably cashed out somewhere in and around $1,000 bucks.
About 1,000. Okay.
800 bucks.
I got you.
Just say 800.
Gotcha. Okay. Okay. Thanks.
You are welcome. But how big is your account?
Oh no, I'm not trading. I'm just
Okay.
waiting. I'm waiting on a challenge. I ain't doing nothing.
Okay, great. Well, no, you should be trading some. But somebody in the group said there's way more than that with Hugo's way. Again, I don't want to count it inaccurately for you guys, but you could have ended up potentially on a 0.01 that was still only $1 though, right? Well, I don't know. But on this broker, you're looking at about 800 pips. But you should never be trading US 30 on the 4-hour chart, guys. That's some really ballsy stuff right there, let me tell you. Because you have to be able to withhold the pullback. And that's a lot. So.
Okay, thanks. I appreciate it.
You are welcome. So they said a 0.01 is essentially a dollar pip, which is what I thought. So at $1 a pip, you said a 0.01, right?
Right, a 0.01.
So at $1 a pip, this would be about 800 pip move, an 800 pip move.
800 pip move.
Mm-hmm. Yeah.
Wow. Okay.
And it does it all the time, but you have to realize it moves like it's crazy, you guys. It'll blow your account. And the way they calculate margin for indices is different. So try to kind of keep that in mind.
Okay.
Yes, sir.
Hey,
So,
Jenny.
hey, Austin, how are you?
Hey, good. How are you?
Wonderful.
Hey, just a quick question. Regardless of triple arrow showing up, the news is always going to be coin toss on what direction it goes. Is that right?
Some people say they have it figured out to a science, and they have the record to show that they do. That's fantastic. I feel like that the very smart people in the government already know what's going on. So do the banks. We just don't know it. So I don't think it's necessarily a coin toss per se. I just think that we're not in the know to know, if that answers your question.
Yeah. Okay. Like as far as like the spot traders goes, I guess. We just
Well,
like never know.
Okay, here's the strategy, and it works pretty effectively. You guys want a new strategy? When this news comes out, literally it's called the straddle strategy. People sell it for like $100, $500. There's even free, just so you know, there's free, I said that again, free expert advisors who will do this automatically for you. It's high risk and not really worth it. But when the news comes out, you essentially do a pending order, 5 to 10 pips above where price is and 5 to 10 pips below where price is. And then when one activates, you close the other. You always have like a few pip trailing stop on it, and then just catch that big wick. Catch that big wick. Sometimes news events won't have any momentum at all, any volume, so neither will activate. But in general, you're going to be successful more often than not just using it's called a straddle strategy for the news. It's reasonably effective. What Elvis does for his news strategy, I don't know. But to learn how to trade the news, I told you guys last night that I was kind of working on something. It's not super special and it's not even fancy, and I'm okay if I'm wrong. But I kind of feel like that when we go back and test these moves that we're looking at, everything lines up perfectly, right? And we're like, okay, so how do we get that in our live accounts? How do we get that in our, in real time? And I think, and this is just a theory, I could totally be wrong, but I am testing it to see if I'm wrong. I'm testing it with 5% per trade, basically ignoring the news, okay? So I'm taking the trade that I see without any consideration of the news. So if this is lining up the way I want it to go, I take the trade anyways. Because a lot of times we avoid the really good setup because there's news right here, but news is what actually created the setup. So I don't know if my theory is right, and it definitely may be wrong. But I just feel like that's a possibility. So I feel like it's worth my time. And right now I need to get some hobbies. In fact, I think I'm gonna start a nonprofit, but I have some time on my hands, so I may as well I test it out. I think that news is a little bit more predictable than we think it is in terms of just, or maybe I don't want to say predictable, but I think trading as per usual is possible if you know what you're doing. But we'll find out after a few months after I test it. So.
Hey,
Okay.
Jenny.
Hey, DJ.
Hey, just to add on to that. Well, not really to add on to it, but just another thing to think about. I've been noticing on my demo account, I've been taking trades with the news as well, and it's like uncanny how accurate the triple arrow system is with the news. Like I was just trading with the Aussie news that just dropped, and on the 15-minute, if you traded in the direction of the triple arrows, you won every single trade. And same thing with the NZD pairs too. And I was wondering if you noticed that kind of correlation as well.
That's what I'm actually talking about. Was I think that there's, now look guys, don't quote me, don't quote DJ, so you can't hold it, this cannot be used against us in the court of law in a month or whatever. But I think what some of us are noticing is when we trade, take the trade anyway. So let's say we had triple arrows right here and we're happy with what we see and we take the trade, even though news is coming out. This perfect moment may happen perfectly because of the news. So I'm thinking avoiding the news may end up sometimes like this for us and not avoiding the news. And I probably should not be saying this on a live call where y'all are going to take everything I say seriously. But don't do this at home, please. Please avoid the news for right now. But I do agree, DJ, that is what I've been noticing. So I've been noticing that my system works pretty well, like despite the news. We'll see though. Fair enough.
Yep. So that's why my hand was up. So you can just lower my hand if you want to. Thanks, man.
Awesome. You're welcome. So no, that is not hedge trading. First and foremost, hedge trading is only when you're in the same trade at the same time, doing what I was discussing. Doing is actually you'd close the other order. So you'd only be in the direction of one direction at a time. So no, that's not hedging. The problem with the straddle strategy is dealer increasing the spread. Well, if you do it right, you'll be cool. Like if you're trailing stop and your stop loss is good, you're right. Some of them really do manipulate the spread quite a bit. And for news trading particularly is the only reason why I would recommend a fixed spread broker. And that's the only reason I would ever say do that. Because otherwise in general, you'll end up with more fees. So, but I don't trade the news for a living. I don't think I need to. I would hate to plan my life around whenever one decides to have their meetings. So I don't have a lot of interest in it either. But I also don't want to be scared of it either. So Hugo's Way is a contract for $100 for US 30. I was pretty sure it was $1. So 0.01 is $1 for Hugo's Way. Granted, I could be wrong, but that's what I thought I knew. So that is correct, which would mean it was like an $800 to $1,000 move. I think that's what's cool about having our mentors have different styles. If Elvis makes money off the news and Jenny does the opposite, then heck yeah, the more available trades to take if we learn from them. Yes. I mean, that's the concept. So I don't want to be an expert at the news. I don't have a huge desire to put that kind of like stress in my life. I don't like fussing. I don't see a big reason to. So, yeah, we'll see. We shall see. All right, a few people have their hand raised real quick. Let me go to them. I will lower you.
Quick question, Jenny. Oh.
Hey, Quan, your turn. Go ahead.
Hey, how you doing? I was basically looking at the pair that you were just analyzing. I actually have two questions, but the first question is from the Euro USD pair that you took a trade on.
Mm-hmm.
I noticed that you went against the triple arrows, and you still had some more of the rules still, hanging in our, in our favor that we went by. And of the rules, we had the 50 price was below the 50. We also had the EX in our favor, the MACD 18 crossover, the current strength. All that was basically in line. And I noticed you said that it was until the price basically broke the daily dots was like when the bells and whistles went off, and it was more of a, I don't know, you checked the other indicators and things like that were aligned, and you were able to enter the trade even though you were inside that 4-hour candle. And I was initially thinking that we should wait until that candle closes, but you felt confident enough to go ahead and enter on the daily, the break of the daily dots. All the other confirmations went up, and then you were able to take the trade based off of half the ADR. So my question is, even though you're against the triple arrows and that break of the daily dots, is that the main indicator, I would say, between, you know, once triple arrows go down, my daily dots have to answer the question for me, because sometimes you can get in some of these trades and it just stalls out on you, and I'm like, okay, now where's the gas? I mean, where we're going? But I
Well,
hear
we
you
can
talking
avoid
about
that. So, no, it's okay. So like this right here is ugly. None of us could have avoided that. It's just if we took it for any reason off of any time frame, we sometimes get stuck in moments like that. We all try to avoid that, even myself. This is the kind of trade I try desperately to avoid. That's why I really like, for my safest entries, to have certain rules met. But either way, here's the deal. If you make, and I took the, if price, how do I say that? Because they disappear, I can't even show you. But we have triple arrows here. Price goes up, money. Okay, we had daily dots here, as you saw.
correct.
So once it breaks below that, makes a lower low, you can definitely get 10, 20 pips out of that. So that's a great trading style. When price makes a lower low, you can easily get 10, 20 pips out of that. I mean, unless it's an uber slow mover and or the spread is too high, to get 10 or 20 pips, and as you get more proficient, you can go for more. But for right now, just imagine this naked, and I can pull that up. I used to have a naked chart, but I don't anymore.
Okay.
I'll just do this. New chart window. This I kind of made as my default, so it's not going to work the way I wanted it to, but it'll work. Like using the fractals, same concept. When price makes a lower low, you are selling. And even if that means you're only scalping it for a minute, that is one of the safest, easiest ways to trade. So kind of just taking this as pretty closer to naked without spending a whole bunch of time to make it naked for you. Price broke this low. We are selling. Price broke this low. We are selling. It's not super hard. And if we go to over here where the fractals are, the fractals make it super easy. There was a gentleman who says that his buddy uses them the opposite way, which you can do it that way. The way I prefer to use them personally is when we're looking for added confirmations, for instance, here is a fractal, here's a fractal low, here's a fractal high. So to the best of your ability, pretend like there's nothing past that candle. Here, I'll take off this line. Delete. So to the best of your mental ability, pretend like we are right here in the middle of this candle, nothing is beyond it. So if price breaks this high, we're looking for a buy, even if it's only a short-term buy, okay, we're looking for a buy. If price breaks this low, we're looking for a sell. Even if it's only a short-term sell, we're looking for a sell. So in this candle, it happened to break. In this case, it wicked, which would have been ugly if it were reversed. But in general, most of the time, the second it breaks that fractal, and this is a timing thing, this is a scalping strategy, to get your 10 pips is easy, like super easy. It's way easy. So it broke here. I had scalped it for 10 pips, I believe, and because I had an EA thing going on it. But either way, and over here, I don't want to be in the US market. There's too much news. So I knew that when it made this over here, we had a doji, we're starting below the 50. We had already broke that, but it didn't make an impulse move yet, so I knew it wasn't ready to turn around. Like, so this was what I was looking for, and I scalped it. So in my case, I can scalp. Does that help you see it a little differently?
Yes. I think I was so hesitant of getting in at the low of the day, and then especially on an open candle, that especially a 4-hour candle, that just thinking that it was going to reverse against me. But even though I saw all the other indicators align, just didn't pull the trigger at that point. I would have waited until that candle closed, and then I missed the move. But
I would use this. Actually, I do use this strategy on the 1-hour chart. Actually, I use this strategy on the 1-hour chart with the trading partner. This exact thing. So if it's below the 50, okay, I do my ADX and my MACD or my RSI. I have RSI on that chart as well. I need it to drop, okay, by 10 pips, which means I'm not doing this on a high spread broker, okay? I'm willing to close out with 7 pips. I'm willing to protect that because, again, this is high risk. This was going off of like 38% something for a trade, but this was high risk. And that's all we did. So we went like this, 10 pips. And of course, you have to think we only did this at certain times of the day too. So we didn't catch every one of these moves. So we mostly did only in London. And he worked mostly in London. I did mostly in New York. Early in New York, we both did together, but most of New York I did too. So that is a strategy unto itself. Knowing that you're selling at the break, odds are this was all a daily dot somewhere around here. You sell it. If it breaks that, it is no longer resistance or support, you're selling. Like, and it doesn't sell forever, it could just wick, but that's a 10 pip wick. 10 pips by 24 trades makes you a millionaire.
That's enough. Right,
That's
okay.
enough.
All right, great. Well, thank you. I do have one more other question, if you don't mind.
Go ahead. Yep.
It's actually on another pair. Yesterday, we made an analysis on the odd USD pair. And basically, that pair was trending down. And we drew like a trend line to represent that the buyers were probably going to be in charge. And yeah, we drew a trend line going down. And then we also drew like a trend line to represent the pullback. And that is correct.
Yeah, I'm with you. I remember. Fortunately, it wasn't breakfast last week. Go ahead.
And we said, okay, well, we'll put this pair on our list and we'll come back and check it. And basically, this is a day later. And to me, the trend line it's the pullback trend line is kind of sort of not broken, I would say. I would think that I'm thinking that the buyers are still in charge right now. But what I do see is ADX. I do see the ADX is starting to creep up around the 40. And previously, when I looked at it, the sellers were in charge. But now, after looking at it, it looks like it's about to cross over here in a little bit. It looks like the buyers are starting to come in charge a little more. But I would think that the buyers will probably still be in charge until the break of the 50 and also the break of the daily dots. So I just want to say, will we come back in day 2 and still reevaluate our analysis from yesterday? And I think we're still in line with what we were talking about yesterday.
So what did we say was the biggest reason why we weren't going to take that trade, though?
Was the news.
I think the
biggest reason, there was a lot of news that came out, and I think we want to let the news play itself out. So,
yeah, so this is probably going to be a super stress-free trade. So this is what, like, from a professional trader standpoint, this is still kind of bouncing around. We're going to have to see what the U.S. news does. Over here, the U.S. dollar is still really, really strong. But as you can see, so is the Australian. So that's kind of competing. That doesn't give the super wide spread in terms of something like this that we want. See that perfect spread right there? When it's not wide apart, that's how you get this drop. When we're still kind of tickling right here, not so much. But I think eventually this is going to be a good trade. Eventually. So even if it only is a pullback to 50%, it's 150 pips, give or take. That's what I see is possible. But like, go ahead.
Okay, so what we're basically waiting for is the impulse move there, and then we'll wait for the pullbacks.
Well, so let's see. We broke this engulfing candle. This is the hugest, the biggest bearish candle. We made a lower low, and now we've officially made a higher high, right? Sorry, a lower high. Did I say that right? Yes, a higher high, a higher low. Wow, you can't talk. Okay, we have another engulfing candle right here, but we broke that, so we're now lower than that. Okay, and this is in terms of candlesticks. Okay, we don't have any, definite kind of patterns here that I see personally. We do have a wick to the top side. Again, in general, I like it, and it meets most of our rules. But it currently, and I like the fact that there's daily resistance right here, or daily dots. That's awesome. I like the crossover, the fresh crossover. That's awesome. Again, a fresh crossover here. I really want this to be above that, but we would wait to see what happens here. Because if this is the impulse, it's going to correct. it's going to correct to some degree. Maybe not the entire thing, maybe not even 50%, but we're going to know. At this point, this could technically be that flag for it to continue dropping. And then
Yes.
so I'm not against taking this trade, but I just, it's not on my like, woohoo, I need to watch this. I'm waiting for this move. There's 150 guys. Think about it. So what is one standard at 150 pips?
1,500.
Okay, so what's 10 standard on 150 pips? And this is USD pairs, so it's all worth $10.
Yeah.
That's $15,000. Right?
15,000, yeah.
So when you guys see moves like this, and you wonder why, like, I don't mind, I can look at charts and just have some fun with it. Because when I see a 150 pip move, and this is not a fast mover, like, I'm confident that this is enough to pay bills for an entire month for most people, right? One pair, one trade, one time. No stacking, no risk, no drama.
Okay.
That's what I see. But I'm willing to wait it out and say, okay, I've got enough confirmations. So would I probably take this pair? I mean, let's see. I would want something else. So I want either this to be above the zero line, okay, or my momentum to be up. I would need just one other thing at least, okay?
And would you still need the break of the daily as well?
This right here to make a higher high?
Yes.
No, I mean, you could maybe do it something like, where's that chart at? So, for instance, once you see it, let's drop this on here. You can drop down to the 1 hour chart if you chose to and say, okay, so when it breaks that next fractal level, it's probably going to form a fractal level very soon. When it breaks that level, take it for a buy.
Okay. I see.
I mean, so you can do it multiple ways. I like how it's setting up, and this might be the move, which means if this is the move, silly me.
To go to the daily support.
I mean, that already is 50 pips, so that's not a bad move.
Correct.
Not a bad move at all, but this was a news candle. Didn't they just have news on?
I think they did it. I'm not 100% sure.
Yeah, so I think it was a news candle.
They had
So,
news on.
on the 1 hour chart, I mean, you're above the 50. You have daily dots. Your momentum is up. Okay, you have a crossover and you have volume. So this is looking really good on the 1 hour chart. Even if it only means going, this is how like one of the people I've worked with and I trained, like he takes this signal for half of the ADR and that's all he does. Okay. So this signal right here. So is it a good buy? Yeah, I mean it is. The only really deciding factor is that news. So.
Okay. Okay. All right. Great. Thank you so much.
You are welcome. Hey DJ, when did you enter? Or DJ, more accurately, what time frame did you enter on?
I entered on the 15-minute. I was originally gonna do the Stairmaster, but it just looked better for a now later, so I did that.
The Stairmaster for a sell, so you did the now and later for a buy?
Yes.
That's what I thought you were saying. That's awesome. And that was a good call.
Yep, but unfortunately, I only took it on my demo account because I seen news was coming. I'm still trying to see the percentage of the wins with the triple arrow going in the direction of the news.
Well, so you did take that trade right before the news. Is that when you took it?
Yeah, it was about an hour before it dropped.
Yeah, I understand what you're saying, but here's the deal: when you start losing, you're going to start saying it's because of the news, and then you won't know what to correct in your strategy. That's the only hard part.
Yeah, I mean, yeah, you're right. You're right. But I guess it's just for fun. Then I just really want to see the percentage of, like, if the triple arrows can actually predict the news, better than 70 or 80% of the time.
Do you have its own account for you to test that in, or no?
Well, yes and no. This account has already tested other strategies in it, but this week I've started just primarily using this account for it.
Okay, well, take an account by itself. Use only the 15-minute chart, the triple arrows, and nothing else. Like, have a set of rules that you follow specifically for that, and you take them regardless of what the news is doing, right? Or like you take them before the news with the 15-minute triple arrows every time and see if it's accurate, see if it can predict it. And then if it's right, then you'll know. but you're going to need like 30 days of data at least.
Okay. I will. I mean, obviously, I can't be up for every news event, but I'll go ahead and do that, and I'll send you the results.
That sounds like a plan.
All right.
Yeah, cool. Thank you. That would be great for everybody. Hey, there's some people who are asking. Oh, sorry, Everett, do you have a question?
Yes, can you hear me? Is it any better?
Oh, I can hear you tonight. There you go. How are you?
Okay, awesome. I'm good. Thank you. Yourself?
Wonderful.
All right. I'm sorry. I can only chime in at like 9 o'clock, so I always miss like the first 30 minutes. So I apologize if I ask anything that you already covered.
No, it's okay.
Yeah. So, I'm really comfortable with waiting till it breaks the 50 and the ADX and the MACD and pretty much everything that you do. I'm really comfortable with waiting for those entries. What I've found is that you get less of them, but they're way more accurate when you do have them. My only concern is that how would that compromise any the compounding strategy at all by having to wait so long for entries? Like today, I only seen one that fit the criteria, and maybe I missed it because I'm new, but I only seen, I believe it was the USD CAD for a long, and that was the only one that I've seen that met all the criteria. What would you say to that?
I'd say, look, it's a marathon, not a race, not a sprint. So, like, look, there are some people who can find, like, they can do this with a 10-pip trade, 10-pip strategy, 24 trades. But here's the deal: they're probably going to blow 10 to 12 accounts, and they're going to make it. Hold on, let me mute you. You got background noise. I muted you real quick just so you can hear me because you have some background noise. But then you can unmute if you need to respond. But here's the deal: like, there are less of them, but the thing is you will have a 0% chance of accurately or able in any sense of the way to compound your account to 6 or 7 figures. I promise, you will not ever hit 6 figures if you compound by less accuracy. The only way to compound, and the only people who can actually do it in all fairness, are people who have high enough accuracy to be able to do so. Because no matter whether you're using a 10-pip strategy or a 50-pip strategy, if you're wrong 5 times with that level of percentage of risk, you will have blown your account. If you're wrong too many times, that's what's going to happen. So coming from somebody who, yes, it happens less, and you're right, they are fire. They are the best quality trades you will take no matter what other things you enter on your chart. I promise when you actually line them all up and are hitting most of your rules on the checklist, you won't be wrong often, and if you manage it well, you won't be wrong even less often. So, like, you'll be super awesome. So, I mean, if you're looking for something that you get 5 trades a day, like you should.
Okay, I'm sorry. I chimed in while I still had a chance because I'm working, so my hands are busy, and I just had to jump in because I didn't want you to say, hey, you got anything, and then you get nothing. Sorry. But that means a lot. So would it be safe? Because I like the 4 hour. I agree. It's from what I've seen, it's the most stable. However, I get later entries. So for a second, I was using fractals to help improve on my entries, but I did it at the sacrifice of some of my other indicators. And I was wondering, I can't remember if you told me or if I spoke to a friend of mine in the group who said that you use the 1 hour baseline for entries. And I was wondering if that is the case, because I don't know. If that is the case, what other indicators would you use from the 1 hour to correspond with the 4 hour to determine if it's a good entry? I hope that question makes sense.
So yeah, the majority of my trading career, I entered on the 1 hour chart for most everything I did. The last 2 months or so, I haven't had a lot of time because I was moving, so I mostly only looked at the 4 hour chart. So if you could add one thing to your 1 hour chart, I would say it'd be fractals. Because fractals isn't something that somebody created. It's not another oscillator. And you don't even need it once your eyes learn it. But once you break and make a higher high, you can take that for a buy. Or once this one formed, oh, here, another guy there's 3 ways to use fractals. I only know of 2 very well. But here's an entry right here where it broke this high right here and it goes up. That's an entry. When this one forms down here, it's another entry. So right on this candle, for example, we didn't quite yet break a higher high, but you have a fractal that formed and you're right here. You can take it for a buy right here when it breaks this fractal level for the buy and you're above the 50. And you just do that constantly. So you can get 10 pips a lot of times. But that's the concept, is that's what you're looking for.
Okay, so you do that on the 1 hour, and then you manage that entry from the 4 hour based on that 1 hour fractal break?
Yeah, I mean, well, this is more of a scalping thing. If you're asking me, I just find it easier and effective and fun. But yeah, so like if all my rules lined up on the 1 hour chart, I could take it. Background noise. I'm so sorry. I gotta mute you.
No.
Okay, there we go. I'm sorry, but like it sounds like someone's like whistling in my ear with heavy machinery. So, anyways, yeah, you can totally take your entries off the 1 hour. You can find all the same confirmations on the 1 hour chart. So go to this same setup, similar concept. You can do something very comparable on the 1 hour chart, and you're going to be pretty effective. For me, it happened that I was moving across country. I was dealing with a lot of things in my life, so I went exclusively to the 4, and I realized that it was pretty stress-free, and it was like, wow, okay. So I even stopped checking the lower time frames. Now, granted, I find a lot more entries on the 1 hour, a ton more entries. Again, here's your fast entry, here's your slower entry. They're going to be super, super accurate, but you can totally do it on the 1 hour. It'll all work on the 1 hour. So, I've used the 1 hour quite a bit. I know, right, Brian? It sounds really loud.
Awesome, thank you. Yeah, go ahead and mute me whenever you got. I just chimed back in to say thank you for that, and hopefully I can ask more questions on other days. So thank you.
You are welcome. Sorry. Okay, Stanley, do you have a question?
No, I just wanted to say thank you for giving me the candle times. I stuck to that this morning, and the same pair that you were looking at, the Aussie CAD.
Yes, that was ready.
An entry using the 12 candle this morning, and I found a couple of other entries. So I do thank you for that. It gave me some hope and some encouragement.
Awesome. I'm so glad that it worked out for you. Yeah, knowing the candle times is really beneficial, because then when you're back testing, like, you don't have to second guess, well, this never happens when I'm looking. You can prove that, hey, this happens when you're looking. So.
Yes, I was very frustrated, but I started looking at the candle times that you gave, and I said, okay. So I got on the call late tonight, so I'll have to listen to the recording. But I do know that I also need to have my paper beside me, writing down the trades and checking off to, the indicator if everything lines up before I take the trade. So I do thank you.
I'll do super well, yeah. And hey, we went over the compounding at the beginning of this call, just so you know, if you want to watch that.
Great. Okay, I will definitely be listening to
yes.
watching the recorded call. So thank you so much.
You are welcome. Hey guys, so see odd CAD, we're on the 1 hour chart. This, I would not touch odd USD for Ryan, I believe that was. But this trade right here, we broke a higher high, okay? Odd is stronger than CAD. I mean, this one's not as much stronger. Your RSI is super strong, okay? Yeah, we're against the daily dots, but here's the deal. Even if we only go up a little bit of the ways, okay, and this doesn't turn to be the huge reversal we're waiting it to be, we can at least get 30 pips. We can get 20, 30 pips easily. That's how I see the market. So we're above the zero line on the MACD. Take this trade. Just take it for 20 pips and see what happens. You can do a 0.01. We have a clean crossover, and see how it's widespread. I don't care that this is peaking down. Sure, it might be a little pullback, but we won't die. But our momentum is now coming up above the 40, which is exactly where we want it. Okay, this is a good trade. Even now, it's not. So we see stuff like this, and then we say, oh, no, we can't enter. No, that's where you're wrong. This, you can enter. This wick is ugly, but odds are that's because of news. And it definitely may or may not work out. We can't guarantee that because yes, it's stalled over here at this high. So that's not super appealing. Oh, it's stalled right there. But where I see this going personally is it bare minimum to the average daily high. But we know we're watching this pair on the 4-hour with the triple arrows for the actual breakout. So just in case we're wrong, can we get 20 pips? Probably. And if we're right, that we can get 150 pips. So that's how I see this. On the 4-hour chart, which is what I was drawing actually before she had stepped up, is we are now above the 0 line on the MACD. We have a lot of volume in terms of Australian dollar. Let's draw again because of the news in all fairness. But everything on this is a go. Our 8 and an 18 and 50 are perfectly in symmetry, so we are now buying. We made a higher high. We are buying. We're just waiting to break out. Odds are these dots are going to disappear. I could be wrong, definitely. I'm human too, but odds are these two will disappear and this will have busted through. Worst case, it came up 20, 30 pips and then it turned around. So, but okay, guys, I've been talking for a really long time tonight. So, are there any other questions or comments for right now? JPIC, the settings for my currency relative strength indicator are standard. I just add the RSI to it. I drop it on there because then I don't have to have another oscillator window open and it frees up some screen space for me. So, yes. Anybody else? Let's see. You're welcome, Juan. All right, guys, well, I'm going to say goodnight. Sweet dreams. Thank you so much for popping on with me, and we will definitely talk again soon. I'll get this posted tomorrow morning.
Thanks, Jenny. Thanks, Jenny.
Good night. Thanks a lot.